Hello and welcome everyone. I am Shidil Bhargav from Financial Express, and today we have with ourselves Nikhil Kamath from Beacon and Zerodha. He needs no introduction. He's one of the youngest billionaires in India, and today we will be discussing stock markets and general capital market movement around with him. So, Nikhil, welcome. How are you?
Hi, Kshitij.
I just wanted to start with the basic question that I think everyone has at this point of time around stock market. What do you see as the biggest risk for domestic markets at this point of time? Because we have a lot of things going on. So, what is the biggest risk according to you?
Uh, Tough to categorize it into one thing, but I would say a combination of inflation, slowing growth rates, corporate margins coming down, and the geopolitical issues. I think together are the biggest risk.
You said that inflation is also one of the reasons that you see as a one of the risks that you see for stock market. Inflation has been soaring higher, and it is. I think for a few months it has been above RBI's comfort zone now. So what do you think that it means for going ahead? It would mean for stock markets if it continues to remain elevated.
So inflation primarily seems to be a lot higher than the numbers that we. It feels to me like we could be at 10% or something like that on the ground. Uh, What it means is the only tool the Reserve Bank really has to reduce inflation is probably taking up interest rates. If one were to assume that inflation is at 10%, interest rates will probably have to go 1 or 2% higher than that to be able to contain it. So 11-12% inflation environment is probably really bad for corporate earnings in terms of margins, and that in turn will have a negative effect on the stock markets. Like we saw this morning, HDFC and Infosys, their margins have dropped significantly. More of that might happen in the coming months if the global environment around money and inflation does not change.
Keeping on the same note, do you think that the earnings season that we are in right now, it is going to be not that great that we have seen over the last few quarters?
I, I think so. Yeah, see, Kshitij, very simply to put it, we've seen crude rally 100%. We've seen everything from iron ore, copper, zinc. Uh, Everything has gone up tremendously. There has even been some kind of a rally in asset classes like real estate and stock market. Now, when everything has become so much more expensive, I think how, for example, take a FMCG company, for example, if the price of tomato and lemon and potato and wheat is up as much as it is, uh, it's but a matter of time before either the price of the end product goes up significantly or the margins come down fast. We have not seen it in the last 2 quarters, but I think it happens with the lag. So I would assume that will happen in the next couple of quarters, and that will seriously dent corporate earnings.
So, as you mentioned, crude oil prices have rallied so much, and they haven't cooled off yet. They still remain significantly above 100, I think. And then again, we have the Russia-Ukraine conflict going on. So, would you say that it would be wise for investors to stay out at this point of time rather than going all in?
Well, considering that we've corrected a bit, we've come down from 18,400 to 17,200. It would probably be prudent to not have vanilla exposure in the market. As part of a diversified portfolio, if you have gold, if you have equity, you have some fixed income, you have some corporate debt, you have some real estate, and if you have a 20-30% allocation to equity, might be fine. But if you're solo investing all your money in equity, it might probably be a tad bit expensive today to have such a portfolio. I would recommend increased diversification for most people.
So, at this point of time, is it wise to go defensive?
I think so. I'm going defensive personally. Like I have a very, very defensive portfolio right now. I've reduced my equity allocation a lot and taken up the gold allocation.
Understood. And as you said that markets have come down from 18,000 to something around 17,100 right now. So, what do you make of valuations at this point?
Valuations make sense relevant to earnings. As per earning forecast, maybe we're in the ballpark of okay, but I have a feeling earning forecasts will not be met, and earning cycle will kind of take a hit. So with lower earnings in the coming quarters, I think today is expensive. Today's valuation is also too expensive.
So talking about valuations, we have seen some crazy valuations in the past few months with IPOs coming into the market and internet companies in particular. And you have time and again stated that you do not seem to be a big fan of the valuations that they came in on, like the likes of Zomato, Paytm, Nykaa, and all. And now they have significantly fallen so far this year. So are you tracking them now to dive in, or are you still staying away?
No, I'm tracking them and they've recovered a lot. I mean, if you were to look at them in the last month or month and a half, everything has gone up a lot. Nykaa is back at 1800. Zomato is quite okay. It's still above listing price, I think. And Paytm seems to have started recovering in the last 10 days as well. See, I don't like companies which don't make a profit because I like valuing companies as a multiple of profit. Uh, I don't think it is right for anyone to factor in future growth before the growth has happened and value the company as if that were a certainty. The ecosystem constantly changes. There are new competitors. None of these companies have a really big moat or anything like that. So I would remain skeptical even at current valuations. At some level they will become attractive, but I don't think that point is today.
So what is attractive to you at this point? Or what are the sectors that, if you can shed some light on that, that you are keenly looking at?
Like I was saying, gold I think seems quite attractive today. It's sitting on a 5-week peak today and it has rallied a little bit, but gold does seem attractive. In terms of companies, I would say nothing sector specific, but independently, there are some companies that I like and I've kind of added allocation to. I like things in the entertainment and travel space of late because I think the opening up trade is going to last in India for a couple of years. And uh, I, I'm not a fan of banking right now. I remain slightly skeptical about how much the banks rallied relative to the benchmark, relative to Nifty over the last 3-4 months.
We have not seen many IPOs come off late comparatively to this time last year. So to say, we had a lot of IPOs coming to the market, but there are plenty of companies that have got SEBI's approval. And what do you think is holding them back, and what do you think that would be the IPO scenario into this financial year?
Well, LIC, I saw a couple of days is going to come soon. I think that will be the mammoth IPO of the year to watch. The factor that might be holding at least technology companies to come out is what happened to the ones which listed last year. I think that has freaked people out at some level. There seems to be an arbitrage in valuations, an opportunity available between private and public markets. I think private markets are excessively optimistic, almost unreasonably so, and public markets, while still being optimistic, are relatively cheaper and uh, probably a better means of valuing a company than private markets. At some point, that arbitrage will go off. I think that might happen towards the direction of public markets, wherein the private companies will kind of like be valued downwards. And to a certain extent, I think the private markets are today cognizant to that, and hence maybe IPO flow or the stream of new companies coming in has kind of slowed down.
And what about the retail investors coming in? Because you are part of one of the largest broking company in the
It
country.
slowed down. It slowed down in March. I think Jan, Feb, that crazy spike was going on. Ever since March, things are slowing down. I would say 20-30% slower than Jan, Feb.
And so lastly, I wanted to understand, what's your outlook in terms of RBI? Do you see a rate hike in the next policy meeting?
They have to. I think there's no choice, right? Like, I don't think one rate hike, but maybe we're in for 5 to 10 rate hikes in the near future.
So I think that's it from my side. Thank you for joining us.